Hi, and welcome to Yahoo Personal Finance. I'm Daniela Dewan, and joining me today is Brenton Tong from Financial Spectrum to talk about assessing IPOs. Brenton, thanks for coming.
Thanks for having me.
What are some of the first things to consider when you're thinking about investing in an initial public offering?
Well, the first thing to do really is to read the document that actually comes with it. It's really important to get a good understanding as to what the company's actually doing. IPOs, there's a lot of hype about them. A lot of people talk about, get in, get early. But realistically, for a lot of these companies, it's the first time they've been on the stock exchange. It's the first time they've really made their financials publicly available. And it's really the first chance to have a good look at what they're actually doing.
Right. And what are some of the benefits to getting in early?
Well, sometimes there are benefits, sometimes there are not.
Yeah.
It really comes down to the float. So every float's going to be different.
Mm-hmm.
The market when the company is floating is also going to be different as well. So a lot of companies will float for different reasons.
Okay.
And they will float at different times. And sometimes they're just raising capital because they're expanding. Sometimes the original founders are getting out. Sometimes there's a whole host of reasons. And that's going to reflect on market timing as well. So if people are really, really confident and the market's going really, really well, then an IPO on average will be quite well received.
Okay.
If the market's not really as confident, but a company needs to raise capital as part of an IPO, they're going to find that a lot of the hype isn't going to exist. So it's really important to be careful when you're getting into an IPO. Make sure you understand the company, and just with any type of share investing, make sure you're not in it for a quick buck.
Sure.
Make sure that you're willing to sit on those shares for a period of time.
Sure. And are they some of the reasons as well why they're offered to retail investors first?
Well, an IPO is offered to a mixture of retail investors as well as institutional investors.
Right.
You'll find that the larger share floats tend to go to a much broader range of prospective investors.
Yep.
Quite often they'll actually go to the banks and the institutions first because those are the ones who will actually provide the big chunks of money to make sure that there's enough money coming through the door to make it worthwhile.
Sure.
But there are a lot of small floats that are targeted at the smaller investors because they're actually too small for some of the larger banks there as well.
Okay. And what are some of the risks to watch out for here?
Well, things to look out for is, again, just avoid the hype is probably the most important thing. A good company is a good company regardless,
Right.
but a bad company is often easily masked and covered up as well. So a lot of people are wary of IPOs thinking, well, if everyone's getting out during an IPO, why should we be getting in?
Yeah.
But there could be a lot of other reasons, such as raising more capital to expand. But an IPO is just the same as buying a share.
Okay.
The only thing is it's untested. So the price which is being offered is really just a theoretical price, and you're not really going to know how it's going to perform until opening day.
Okay. And how do you know if it's a hype or not? Is there a secret, tip here?
Well, if there was a secret tip, I think I'd keep it to myself. But there are no secrets to it, really. It's just really about research and understanding, and just getting a good feel for what's actually going on.
Some great tips there from Brenton. Thanks for joining us. See you next time on Yahoo Personal Finance.